Hello, my Accounting 210 students. Welcome back. In this video, we talk about our Chapter 4, Activity-Based Costing. You can see from the title, there are actually 3 parts, but we basically focus on the first one. Activity-based costing is a very popular topic, I would say, in the reality. Sometimes if you read news or if you read journals, you can see people use this kind of a fancy terminology called ABC costing. So that refers to our AB activity-based costing. So now let's get started. For this chapter, as I mentioned, we focus on the ABC costing only. So don't worry about the learning objective 4 or learning objective 5. Before we really talk about chapter 4, I want to first review chapter 3 with you. You said, oh my goodness, chapter 3, my nightmare, right? So we focus on we review chapter 3 together, and then as you can see, the key word is manufacturing overhead. Why manufacturing overhead is the part we want to focus? Because for direct material or for direct labor, we can always trace them. So this is direct cost. We can always trace direct cost. We know, oh, for this specific job, we really traced like $10 direct material, $20 direct labor on this specific job. But for manufacturing overhead, it's indirect cost. So we cannot trace, we cannot know, hey, how much really goes to, like, how much of the utility, how much of the insurance, how much of the depreciation really goes to this specific job, right? You don't know because you have so many jobs. And then now let's say, hey, you are running a business in the manufacturing department, you run the machine, and then all that machine, they use electricity. So in 1 year, the electricity totally is $200,000. I'll just make a number, $200,000 with the electricity bill. And then you had various of jobs. Then how can you trace, hey, for this specific job A, how do you know how much the electricity directly goes to this specific job? You cannot really trace. So the only thing we can do is we allocate, right? So we have to allocate. And then how do we allocate our indirect cost? That will be really artificial. You, like, I have my way to allocate, you have your way to allocate. For trees, definitely it's straightforward. You just trace it. But for allocation, it's kind of like a personal judgment. It's like a gray area. People have different allocation method. So that's the reason we spend a lot of time and energy on manufacturing overhead allocation. In chapter 3, we learned one method to allocate, right? So we said, how do we get our allocation? First is we get the predetermined rate. How do we get this predetermined rate? Before we start the year, before we even get the job, we have to find out a rate for all of the jobs in that manufacturing department. We use our estimated total manufacturing overhead. We divide with our estimated cost driver, right? Cost driver. It can be direct labor, it can be a machine hour or anything. So you get this predetermined rate, and then once you finish your job, you have to allocate. How do we allocate? Is we use this rate to time what? Time our actual cost driver. So let's make up a number. We said at the beginning of the year, we found out, hey, use our manufacturing overhead estimated cost driver. We found out for one machine hour, we have to allocate $10 to manufacturing overhead for one machine hour. And at the end, when we finish our job, we need to allocate the manufacturing overhead. We found out that for this specific job, we used 3 machine hours. For this specific job, we used 3 machine hours. Then our allocation of manufacturing overhead for this job will be $30 because one machine hour we allocate $10. 3 actual machine hours, we have to allocate $30. So you will say, oh my goodness, I feel so confused. Why there are so many terminology? I have estimated manufacturing overhead. I have the allocated. I also have, no, there is another thing called the actual. So while I have 3 different terminology of manufacturing overhead, you are so right. We have 3 different things. One is estimated manufacturing overhead. One is our actual manufacturing overhead. One is our allocated manufacturing overhead. Okay, so for estimated manufacturing overhead, you only use this. You only use it. You only use estimated. You only use estimated when you do this estimated rate. Okay, so I use the gram. I just use gram to highlight. You only use your estimated manufacturing overhead when you get your predetermined rate. So once you get this rate, you never ever use this estimated number again. Repeat this sentence with me. I only use estimated manufacturing overhead to get this predetermined rate. Once I get this predetermined rate, I will never ever use this estimated manufacturing overhead. Repeat it with me. Okay, so we take care of this estimated manufacturing overhead. You know when you use it, you only use it to get this predetermined rate. For the actual and allocated, I kind of think they are kind of like a cousin. Ideally, we want to use the actual manufacturing overhead for each specific job. But as I said, we cannot do that because we cannot trace the specific number. So we kind of use this allocated as a proxy. We kind of use this allocated like a father or like a cousin, you know, to present this actual number. And you know, if you use this, then it cannot be 100% the same. Most likely they are kind of close, but it cannot be exactly the same. So at the end, remember chapter 3, journal entry, I don't know you like it, yes or no, but at the end, we have to do one specific step, is we have to adjust our manufacturing overhead, right? We have to adjust. So I said your left side is always your actual. So your left side is always your actual. Your right side is your allocation. I said the manufacturing overhead is like a swimming pool. When it happens, you pour water in the swimming pool, you debit it. When you allocate it, you get the water out from the swimming pool and you pour in that specific job, right? So let's say at the end, you found out your actual is 100,000. I make a number, and then your allocated is only 90,000. So first question I'll ask you, under allocated or you over allocate? You should be 100,000, but you only allocate 90,000. So it's very clear it's under allocation. So what we should do, what's the journal entry? So we have to credit $10,000, right? We have to credit $10,000. So if we do this, then the balance will be 0. So we have to credit our manufacturing overhead. And what we should do, we debit the cost of goods sold because we didn't allocate enough. Now we have to adjust. We increase the cost of goods sold, and then we allocate more manufacturing overhead. Okay, so you use the actual and then allocated. You use these two when you at the end you adjust for manufacturing overhead account. Okay, so this kind of take care of this predetermined rate. And the next thing you also have learned in chapter 3 is I want to also go through the journal entry or the cost flow very briefly with you. Most likely at the beginning, you get your direct material, right? So you purchase your direct material, you debit direct material, you credit your cash or account payable. And then once you use your direct material, so when you use direct material, you can trace it to work in process. So when we use our direct material, when we use our direct material, it goes to our work in process directly, right? And then we credit our direct material. We make up a number. I'll just make up a number. I think it's $10. So hold on, let me read this. It's not that nice. Okay, so when you use direct material, we debit to work in process directly. We say, hey, maybe it's $10. I'll just make a number $10. When we use our direct labor, it also goes to work in process directly. And then you have like a wage payable, kind of like that. And a make number is $20 and then $20. For manufacturing overhead, okay, for manufacturing overhead, when it happens, when it incurs the manufacturing overhead, let's say it's just the utility bill. When it incurs, we debit what? We debit our manufacturing overhead. We debit our manufacturing overhead and make a number like $50. And then you have the utility expense $50. This is when it incurs. And when you allocate your manufacturing overhead now to that specific job, when it incurs, we don't put it to work in process. But when we allocate, now we can debit work in process. And then we credit what? We credit our manufacturing overhead, right? We get the water out from the swimming pool. We allocate $30 to the specific job. We allocate $30 to specific job. So this is general idea. So now you can find out your work in process account has how many parts. Your work in process has direct material $10, has the direct labor $20, and has what? Allocated manufacturing overhead $30, right? So your work in process has 3 parts: direct material, direct labor, and allocated manufacturing overhead. So your total will be $60. But we said, hey, this is just when you work in process. Once you finish it, we want this balance to be 0. We want this balance to be 0. How to make it 0? We have to credit $60. So where did this $60 goes to? Does this disappear? No, right? It goes to our finished goods. It goes to our finished goods. So our finished goods has this $60. Our finished goods has this $60. It didn't disappear. It just goes to our finished goods. So let me... it goes to our finished goods, $60. Sorry. It goes to our finished goods. So it goes to from work in process to our finished goods once our product is finished. But we said, okay, so once you finish it, this is not the end. We want to sell it. Once we sell it, our finished goods will not be 60. It will be 0 because we sell it. So where does this $60 goes to? It goes to our cost of goods sold. It goes to our cost of goods sold when we sell our products, right? So I put here, when we sell our product, our $60 goes from our finished goods, to our cost of goods sold when we make our sales. Why I draw a line here? Because all these parts, they are in our balance sheet. They are in our balance sheet as the inventory. But once you cross this line, once you make the sales, the inventory will become what? The inventory will become our cost of goods sold and stay in the income statement, and will stay in the income statement. So now you can say we go from direct material, direct labor, allocated manufacturing overhead goes to working process, from working process to finished goods, from finished goods to cost of goods sold. And why we need the cost of goods sold? Because we need this to get our revenue. How do we get? We need this to get our operating income. For income statement is the revenue minus cost of goods sold gives us gross profit, and we minus all the operating expense. Remember, all the operating expense we get our operating income. So that is why our finished goods, $60 is important, because we use this to get our gross profit, and we minus all the period cost. Chapter 2, period cost, product cost, we get our operating income. So when you make the sales, last journal entry, right? When you make the sales, you debit the cost of goods sold. You debit this cost of goods sold, $60. You credit our finished goods, $60. You credit our finished goods, $60. And you know, you also have another journal entry to recognize your sales, right? So we have our account receivable, or we have our cash. If we sell at $80, so we have account receivable 80, and then we have our sales revenue 80. How do you interpret these two journal entries? Okay, I know that product cost is $60, but I sell it at $80. So my revenue is 80. My cost of goods sold is 60, so I kind of have $20 as my gross profit. And then I minus all of the other operating period cost, I get my operating income. Okay, so if you know what I'm talking about, congratulations, you have good understanding with chapter 3. If you still have a kind of confused, that's fine. It takes time to digest and really get it 100%. So do more practice. Ask me if you have any question. I stop here. I promise you this is the video for chapter 4. So I just review chapter 3. Chapter 3 and chapter 4, they are related, because in chapter 4, we still focus on manufacturing overhead allocation. We just have a different method to allocate this indirect cost. So I see you next time, and we definitely talk about chapter 4 there. Thank you. See you next time.